Greetings, members one and all of the Salivation Nation. This new rally that we've been seeing in precious metals, gold especially here, is quite a fascinating thing. And there was a survey taken by Kitco, and it asked the question, are we in a new rally, or is this just a head fake? So we'll kind of explore that. You know, many of us out there are kind of skeptical with regards to the markets and where they go. So I think it's something worth exploring to see exactly what's going on with the prices. You know, silver's now above $18 an ounce, and we've seen that movement here. And I think it's been quite an exciting time here. It's $18.11, and gold is up 70 cents. It's over $1,500 an ounce again. So, you know, are these new resistance points? In other words, another floor. You know, you remember the video I posted a while ago about $1,500 gold. Well, now we're back up to that again. That's been a little bit more of a softer floor than silver. We saw silver at $17. I think one time it peaked, or it dipped for a very short amount of time below that $17 level, but it's been pretty steady above that $17 level. Now it's back up to $18 again, and is this something that is going to be a new norm, or is this something based off of recent events and reports coming out about jobs and the things and concern about the economy with certain factors coming into play? It's anybody's guess, really, but I think the sentiment around is something we'll explore in this video. Yes, this poll that was taken, a gold survey, and it didn't really talk about silver, but I think it is an interesting thing to see what the sentiment would be for silver. My guess is it probably wouldn't be quite as much of excitement in silver, just because it's a more volatile metal, and considering its duality as an industrial metal, more so since gold is treasured more so than silver. So what a difference 24 hours makes here in this Kitco piece can make in the precious metals market. A late week drive in gold prices is generating significant bullish sentiment in the marketplace among Wall Street analysts and Main Street investors, according to the latest Kitco News weekly gold survey. So the question remains is whether this rally is the start of a new uptrend or just a head fake. Although prices are still stuck in a range, analysts say the technical momentum favors higher prices in the near term. But only time will tell if critical resistance at $1,525 will break. This week, 18 market professionals took part in the Wall Street survey. 14 analysts, or 78%, said they see higher prices next week. One analyst, or 6%, predicted that gold will fall. The remaining 3 voters, or 17%, saw a sideways market or else were neutral. Meanwhile, 890 respondents took part in an online Main Street poll. A total of 583 voters, or 60%, called for gold to rise. Another 193, or 22%, predicted gold will fall. 159 voters, the rest, saw a sideways market. So here is the actual graphs of those polls. You can see overwhelming sentiment, but a lot less sampling of Wall Street saw a bullish market for gold and bearish. Basically one person said they see it going back down. Neutral for 17%, which is very close to the Main Street. Sideways, 18% thought it was neutral, with a 60% bullish and 22% bearish. Very interesting. In the last survey, Main Street proved to be correct as it called for higher prices for the week. As of 12:26 p.m. Eastern Time, December gold futures last traded at $1,505 an ounce, $1,505.20. The market is off its earlier highs but remains up nearly 1% compared to previous week. Wall Street's and Main Street's record is now 20-18 year to date, meaning respondents have been right 53% of the time. That is an interesting interesting analysis. So really, these surveys are a 50-50 chance of being right for the most part, with a slight advantage to being correct. Looking to next week, many analysts said that gold has room to move higher, as it has made significant technical moves this past week, with prices pushing above the 20-day moving average and briefly above the 50-day moving average. Jamil Ahmed described gold's Friday rally as a technical adjustment. He added that there has been a similar move in the oil markets. There's still some upside left in the move higher to gold, although it looks like it will face a potential ceiling close to $1,535, he said. Ole Henson, head of commodity strategy at Saxo Bank, said that he is looking for prices to test initial resistance at $1,525 an ounce in the near term. He added that Friday's move broke September's downtrend, which has a lot shallower than some market players were expecting. This shows that there is still an appetite for safe haven demand, but we need to see how strong it is. It is too early to tell if the move is part of a new uptrend, he said. We continue to see the underlying demand for gold as quite strong, and that's a positive sign. Afshan Nabavi, head of trading with MKS in Switzerland, said that he remains bullish on gold because the global economy is still a mess and investors are still dealing with massive geopolitical uncertainty. However, he added that investors' bullish sentiment needs to be kept in check. And keep in mind that if these trade deals get worked out and codified, I believe that will help the global economy. But, we got politics come into play on all fronts in that regard. Gold prices can still go higher, but we are still stuck in range, he said. If gold faces to break $1,525, and we could see the prices fall back to $1,480 very quickly. If resistance does break, then we could see prices at $1,575. I think he meant to say if gold fails to break $1,525. Adrian Day, chairman and chief executive officer at Adrian Day Asset Management, said that he is neutral on gold in the near term, and he doesn't see any surprise news shaking the yellow metal out of its trading range. And that makes sense to a degree, because all the news, it seems like we're kind of grown numb to a lot of this news today, whereas, maybe 10 years ago it would have had a greater effect, and we have a much more intense news cycle, it seems, and it happens very quickly, and you move on to the next thing that can have an effect, and that psychological aspect, I think, is perhaps mind-numbing to the markets. The Fed will likely cut rates, and that is expected, and the commodity may suggest no further cuts this year. Brexit will continue to be a mess, and that is also anticipated. The EU did agree to extend the deadline so it's going to be January 2020 before we see the breakaway. So in some sense, that's status quo, which means that everything is, and with the Fed that will likely cut rates being burnt in to what the market is going to be doing, there's not really much happening when you think about it. Clive Lambert, technical analyst at FutureStex, said that the line in the sand for him is $1,509. That is the level gold has to hold above to break its current downtrend. He added that if this resistance level does break, then he would expect gold prices to push back to $1,566 an ounce, or up to. Some analysts have voiced some concern that the late week rally could be a bull trap, as the yellow metal has pushed higher despite record prices in equity markets, resilient strength in the U.S. dollar, and relatively unchanged bond yields. So there's still some sentiment, as some of these analysts here, that this could essentially be a head fake, so to speak, or fake out, or however you want to word that. But we shall see. I think the overall sentiment is, that we're seeing that this is a bull market for gold. And with the respondents being right 53% of the time, well, hey, we'll see where it leads. What are your thoughts? Do you think this is, now we're just talking gold here, And given the news how silver has climbed above $18 an ounce, I think that's a little harder to kind of predict. But what are your thoughts on gold? Do you think we're going to continue to see it climb? And what do you think about this $1,525 resistance level? Is that really a thing? I know that a lot of the market analysts and the technical analysis bring to that level, but I don't get in that level of and wedging and all this really because there's so much psychology that's unpredictable in the markets, and things can happen from day to day that can move it one way or another and surprise us, as we've been surprised before. But I do think overall, the grand scheme of things, notwithstanding at the normal levels, I believe that we are in a bull market for gold, and I believe it'll probably, at the very least, trade sideways for a while above that $1,500 level. 1509, 1525, we shall see. We'll see where it goes from here. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.